Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted today to be able to speak to CEO Jason Tebb of OnTheMarket, a leading tech-enabled UK property portal. So welcome, Jason.
Thank you. Good morning. Nice to speak to you.
Yeah, well, a lot's been happening in the housing market of late, not least yesterday's report from Nationwide that home prices had gone up 10% like for like year on year. But we've always sort of dig into sort of how the company's faring. Can you just give us a quick summary of the company's business model, its strategy, and its sort of key USPs?
Okay, no problem at all. So first of all, OnTheMarket.com is a property marketplace. It's sometimes referred to as a portal, and that's where estate agents, letting agents, and house builders advertise their available properties for sale and for rent. And then we attract consumers to our site who visit the site looking for those properties to buy and to rent, and we encourage them to interact with those advertisers. So it's a very simple business model. In terms of how does it work, it's a subscription-based model. So an agent would pay to list their stock on the site. A house builder also pays to list their developments on the site. And we make some ancillary revenue from other things such as email marketing campaigns, some other wider banner advertising, and some other products and services that we sell on top of the core subscription. And really the strategy and the USP is about providing a fair and sustainable pricing structure to our agent members, challenging the status quo of the huge dominant players that have been in this industry for decades, and really challenging them and offering this highly competitive price point, but with differentiation in the product and differentiation in the strategy. And over the past 7-8 months in particular, we've really focused on that differentiation piece. We've released what is our core strategy of becoming more than just a portal, based on 4 key pillars that enable us to differentiate our product offering to agents and house builders, differentiate our services to consumers as well, and really starting to be seen as much more than just a core listing service. So I think that they're the key elements. One of the most important ones of those is our new and exclusive proposition, and that's where our agents choose to support us by listing properties 24 hours or more before either Rightmove or Zoopla. And that's a very powerful tool for us, particularly in a market such as this, which really does give those serious property seekers an advantage in their property search.
Yeah, well, just on that new and exclusive one, I touched base with one of your shareholders, Andy Bruffert's, who I really recommend. I mean, he's a very, very astute investor, and he was talking about new and exclusive. How can you? So it's obviously hitting the right buttons in terms of getting it out into the consumer's minds. How are you going to sort of maximize that unique USP going forward to sort of really make it, enormous?
Well, it's a good question, Paul, and we've done some research over the last 4 to 5 months on that core USP. Do consumers understand it? Do they get it? And do they use it? And we've highlighted there's a number of ways that we can make that even more compelling for consumers. If you're in the industry, you totally understand it immediately. But if you're not in the industry, or if you haven't moved for a long time, or if you're just browsing, maybe it's not so clear. So we're literally in the next 2 or 3 weeks about to relaunch that proposition, in addition to the relaunch of the website with an entirely new UX and new customer journeys, new workflows, a new brand as well is coming. But all of those things are focused on making that core USP very, very clear. So whilst I can't give too many details, what I can say is that when we do the site revision, which is coming by the end of this calendar year, it really will be front and center to everything we do, be very clear and visible on the site. So we're effectively going to rebrand that new and exclusive proposition to make it much more direct and much more in the consumer's faces, which is, I think, exactly where we should be now.
Yeah, and then just you mentioned sort of like the granddaddy of the industry, Rightmove, and I was just looking at the numbers, and essentially they're about sort of, in terms of revenue, about 10 times sort of bigger, but they charge, in the terms of the value proposition, roughly around about sort of nearly almost 4 times what obviously OnTheMarket charges. How are you going to accelerate that shift from sort of like, agents using multiple portals or multiple service offerings to going more on exclusive? I see you've made a really good sort of start. You've got sort of like you half year you increase from, I don't know, 700 to 900 or something like that exclusive. Again, how are you going to accelerate that trend to become the go-to provider of these type of services?
Well, on the first point, I make a point of never sort of criticizing any competitor, so I won't make any comments on specifically on Rightmove's pricing model, except to say that, as you're absolutely right in suggesting, we are significantly cheaper. 4 times, it's usually more than that, actually, because if you look at the way Rightmove construct their numbers, they base it on average revenue per agent. There's, of course, some significant scale-based discounts for the very large agents. So actually that average is slightly overcorrected. And if you go to the average agent, they're paying significantly more than the ARPA that's being presented there. We are a quarter, a sixth of the cost. So there is some significant advantage in terms of the pricing structure. But it's not all about the pricing structure. It's about the value we offer for that price. So of course we have the core listings model, which we've just talked about, but actually there's a load of other things that we're now building into the platform to enable estate agents and house builders to benefit from that, in terms of instruction winning, which is probably the most single important thing at the moment to win instructions, around functionality, around ease of access to data, around market intelligence, around communications systems and processes between agent and consumer. So we're building a load of other things that really fulfill this more than just a portal strategy. And we believe that over time that will gain significant traction in the marketplace, not just with agents, but with consumers too, who see that there are elements of differentiation between the portals now. And that will enable us to continue to build that traction. On your second point about exclusive agents, yeah, we're really pleased. We've gone from just over 700 exclusive agents to 968 at the last period, to just under 1,000. They are agents who have decided to say, well, we don't need any other portals at all, because you on the market are providing all of the access to buyers and tenants that we need. And those 968 businesses are operating very effectively and still building their own businesses just with one portal choice. So all I can do as a chief exec, and all we can do as a management team, is continue to show value, continue to show that we're delivering on the expectations, continue to differentiate from the others. And we're hoping then that those 3 things combined will help to increase the traction. And of course, the big piece is the consumer piece, and we need as many consumers as possible to the site. That is sometimes a function of time as well as marketing spend. So you'll remember that Rightmove been going 20 years, Zoop have been going over 10. So we've been in our current state sort of 5 or 6 years, really, since the original business and the concept of Agents Mutual was formed. And of course, we only came to IPO at 2018. So we're relatively newer in the cycle, but we believe that by focusing on serious property seekers, not just browsers, but people who are serious about moving, and really honing the platform around that serious propensity to buy or to let, that's where we will gain an edge. We don't need 100 million visitors to a site in order to be able to be confident that we've got the majority of people who are serious about transacting, because there aren't 100 million people in the UK. There's only 68 million. There's only 27 million chimney pots in the UK, of which 5.5 million are in the PRS. There's another 3 million in local authority and housing associations. So the pool of properties that could ever become available is quite small. So we don't need those numbers, but we need to focus on ever increasing our consumer traction with those people who are most likely to want to buy, rent, sell, or let.
Yeah. And then I know you can't sort of talk too much about it, but just since the interims in July, how have the sort of KPIs tracking in terms of, up to where you announced your sort of interims, I think was in October as much as anything. Is it because obviously the market is extremely buoyant in terms of demand. It's just lacking supply of houses. I look around here, having an unprecedented period of transactions. The housing stock of available inventory for houses to sell has diminished somewhat.
Yeah, you're spot on. We have never seen, as you may know, I spent nearly 19 years as an estate agent, and therefore I know it probably better than most people in this space in terms of the challenges that agents face on a day-to-day basis to win more instructions. And you're absolutely right. There is very little new instructions coming to the market. Stock supply for sales and for lettings, maybe slightly less so for lettings now, but for sales in particular, has never been lower, and yet we are in the busiest transactional sales market since records began in 2005. So it's that perfect storm of ever increasing demand that's buoyed up by that lack of supply. Those economic fundamentals are very much in play here. Add to that, still really low interest rates, competitive mortgage market with more products being released, particularly to low LTV buyers. So it really is a melting pot of that pent up demand, some of that pent up demand still from the overhang of a release from the full lockdown period, obviously the end of the stamp duty holiday, when many people thought that the market would come to a standstill. It absolutely hasn't, and it's because of those fundamentals. In terms of the other key KPIs from the interims, the bit that's really interesting for me is that over the course of the last 12 months, I mean, I've been in at the helm now for just coming up to 12 months in a few days. And over that course of that period, we focused very heavily on really converting those agents who weren't paying anything at all and sitting on our site to from free to rate paying contracts. And without going too much into the details, roughly in the same period year on year, 68% of our agency advertisers were on paying contracts, whereas now 91% of our agents are on paying contracts. And I think that tells us a couple of things. Firstly, it tells us that even though we are in the busiest market ever, agents are perceiving value in our proposition, not just about attracting buyers and tenants. That's what normally people think about a portal, but it's not about that. It's about the next round of instructions and the opportunity to value properties that might come to the market in the next 6 months. And I think that's been seen as being very important for us in terms of one of our key deliverables is driving new valuations to our agent members to give them more opportunity to win new instructions the next time round, either early Q1 next year or maybe into Q2. So I think that's been the real key. And I'm very pleased that those numbers have shown that we've taken that significant jump up in those agents under paying contracts. It's also fair, frankly. It's fair that agents pay this fair and sustainable price for the service that we provide them. And we are very keen to make sure that we continue to increase the value of that product offering to make sure those numbers continue to increase.
Yeah. Again, I would sort of point investors to look at sort of like what is likely to happen going forward. And I know the government at the October budget, the Office of Budget Responsibility is predicting housing transactions to stay high for the next 2 years, because essentially baked on, because we've got higher housing prices, it always is a great solution for sorting out the supply chain issues, because it brings more buyers in the market. And my instinct, I mean, I'm not a house buyer myself, my instinct is that sort of like that tipping point is going to reach in the spring buying season, because I think people have done their DIY, have got their houses nicely ready to sort of like, they've enjoyed it and they're probably ready to sell, and they want to move on to another property, and the spring is probably as good a time as any. But anyway,
I think just on that point, I think you're right, Paul, that we are in a market that, and I see this, I speaking as an ex-agent now, I've seen many of these markets over the couple of decades I've been in the industry. And what normally happens, the things that don't normally get reported in the metrics and the indices and the house price reports, is that how do sellers feel about the market? And the number of things that you can never put on a spreadsheet are very prominent in these types of markets. The first one is, if prices are rising and they see prices are rising every month, potential seller says, well, actually, I can wait 6 months and my house will be worth, if it's going up 0.9% a month, my house will be worth more than it is worth now. So what's the rush? Many sellers don't think about the trading gap that actually is getting wider if they're upgrading rather than shorter. They just think about their own asset and how much it's worth. I think the second thing is, if a potential seller gets a valuation, they get 3 valuations on average, 3 agents come around, say, it's the busiest market ever, here's a list of 30 buyers who would buy your property tomorrow. Sometimes that has the negative impact, because sometimes sellers think, well, hold on, I don't want to be left having to be forced to find a property or go into rented. So actually, I'll find a property before I put my property on the market, because I've been told it will sell instantly. And that sort of, it's this vicious circle that starts to perpetuate itself. Fewer sellers put their property on the market because they believe the property will sell quickly, and therefore there's fewer properties around, and therefore the whole chain can't be made as people moving up and down that chain. So I think it's a combination of all those factors. But I think you are right, Paul, that when we get to the point of probably Q1 next year, we're certainly seeing from our own stats and data, October, for example, was the busiest month on record in terms of valuations booked from our platform. So if there's more valuations booked than at any other time, way up even on the very busy parts of last year after lockdown, then we should see that start to filter through in new instructions coming to the market in the spring.
Yeah, and how's this the part of the sort of the house builders? Because I know you've obviously had a lot of success bringing on sort of the major sort of like national house builders. I saw Linden Homes and Taylor Wimpey and people like that have come on. And how's that strategy dovetailing with your existing estate agent clients?
Yeah, well, it's working really well. Don't forget that the business, that new homes piece was only launched in the latter quarters of 2019. So it's a much earlier stage in the journey. We've seen significant growth from house builders and weirdly, an increase in number of advertisers from the house builders, particularly from the SME space. Now, you would have thought when we are in the busiest market since records began, there are press reports saying people are queuing outside sites to see show homes and stuff. You would have thought that the new homes developers wouldn't necessarily need any portals at all. They just, go on the traffic of their own sites. But actually, we've seen an increase in the number of advertisers. We've seen an increase in people taking additional products and marketing products, targeting particular demographics. So that's gone very well. But we see even more opportunity in that SME space because the SME house builders don't have the infrastructure of the top PLCs. They don't have their own marketing departments. They don't have their own social media teams. And all of those things are needed by even the smallest of developers. So we see this great opportunity to provide a suite of similar products and services to house builders in the way that we already do for agents.
Yeah, and I saw at the end of the interims, you had about £10 million of sort of cash. Clive, your CFO's done a terrific job squirreling all that away. What's the sort of like the investment plans going forward? Because obviously you bought Glanty a couple of years back, I think, and then you increased your stake to take it out. And that's worked really successfully in terms of the prop tech type services. What are your sort of investment plans in terms of that sort of 10 million going forward?
So they're threefold, really. And the first one is to continue to develop our own offering in terms of the product, services and functionality that we have on the site. That's mainly made up of internal development work. And we've already invested this year on internal development teams to be able to deliver that product and service. You're absolutely right. We announced in late May the acquisition of the remaining stake in Glanty that we didn't already own. And that enables us to have effectively a software house that can deliver products and services to our agent customers too. Going forwards, I think it will be a combination of both internal development, increased number of commercial partnerships, which have been highly successful for us this year. And of course, some of those commercial partnerships generate revenue for us. Some of them are defensive to increase and enhance our product offering and offer different functionality to our agent members. And of course, maybe there might be some opportunity for M&A, but we have to be very cautious about it. We know what this space is like. We know it really well. We know the prop tech space is full of potential businesses that have some potential huge growth curves, but also come at very hefty price tags. So we're not about to be suddenly entering into the market to overpay for a product that we could develop ourselves. But we're always on the lookout. And if an opportunity comes around, then we'll certainly look at it. But that's all part of this 3 tiers of the way we will invest in the future.
Yeah, I was just looking at your house broker, Shore Capital, their numbers, and you're obviously going to be profitable this year, which is great, which is fabulous. But you then really sort of like, when you start driving that top line, you get a lot of operating leverage, which sort of falls through. And so, I mean, just to give people an indication, the EBIT margins for Rightmove are over 70%. So there's a big, I mean, whether you ever get that far, I don't know. But even so, that's sort of like the sort of the top of the market. But just in terms of the long term, if you just sort of push the clock forward 3 or 5 years, what is the ambition, the aspirations of the group to sort of get it to size, given that you're doing round about, I think the forecasts are just over £30 million turnover for this financial year to the end of January?
Mm-hmm. So, look, to start with, we don't need to be operating at 70-75% margins to make it incredibly profitable and sustainable and still have significant growth.
It'd be nice though, Jason.
Well, look, it would, of course, it would be nice, but our primary objective is to provide value to our agent customers, who are also our shareholders, and indeed to our other shareholders and investors too. We don't necessarily need to operate at those levels, but all we can do as a business is continue to focus on gaining more traction in the marketplace, more consumers visiting the site. The whole point of our 4-pillar strategy is to provide different product service offering that isn't just always focused on the main portal piece. We've already proven, as you've just highlighted in those numbers, that the core portal element of the business is sustainable, it's profitable, it's cash generative. But there are many other opportunities within this entire property ecosystem to add significant value to our agent members, to add value to our consumers, but also to have revenue generation opportunities from all of those things. So whilst I can't, you wouldn't expect me to say in 3 years we will be here, because I wouldn't do that, but all we can focus on is continue to enhance that product offering. And I think what you have seen over the course of the last 12 months in particular is that there has been a focus on getting the hearts and minds of the agency community. The agency community definitely wants this business to work. We are seen as a viable alternative, not just a challenger now. And I think what we will continue to do is offer increased product functionality, increase value to our customers, and therefore we believe that more agents will see that value. Whether they make the switch and make that portal choice to take themselves off one portal and go on to another is entirely up to them. I would never dictate what they should or shouldn't do, but I believe that as we continue to show that value, they will make those decisions for themselves.
Yeah, well, I would point investors to have a look at the Shore Capital note, because it sort of like shows you the value, and I was alerted to it, say, by Andy Bruff, and I mean, Rightmove trades on roughly around about 19 times sales compared to on the market at just less than 2 times sales next year. That is numbers. And if you look at it in an EBITDA, Rightmove for next year is on 31 times or just over 30 times, and on those numbers, the same numbers on Shore Capital, it's less than 10 times. So there's a significant valuation gap. And I would, again, if the management team can continue to make that shift of, sort of like of non-paying agents on board, it just falls straight to the bottom line, I presume, anyway. So huge amount of opportunity.
Yeah, you're spot on. And also, of course, don't forget, we have a large number of our agents who are still on what we would call discounted rates. They are paying now. That was the main shift from this year. But next year we can continue, because we're showing more value now. We're proving that we are more than just a portal. We can continue to move from those discounted rates to the ultimate aim of everyone on a fair rate for all, a full tariff rate that could be a shareholding rate or a non-shareholding rate, and making sure that is standardized. And therefore there is still significant growth even in that core model, without even putting in other elements such as software provision, data and marketing tools, communication services. There's still that core element has got significant growth opportunity.
Yeah, and just finally then, what's sort of the news flow going forward? I mean, are you going to do a trading update was it late Feb and early March? Is that sort of the timeline?
Yeah, there will be a trading update late Feb, but there'll be quite a bit between now and late Feb. As I alluded to earlier at the start of the call, we've got the new website coming live. That's literally in the next couple of weeks. That will be tied into a new brand, so a brand refresh, which I believe is perfect timing to be able to do it, because this year we've demonstrated that we're more than just a portal and put those building blocks in place. Now I think it's incredibly powerful to say we are a different business than we were 12 months ago. And with that, the new brand, a new TV creative, we're about to launch a TV ad campaign, which will be the largest we've ever done, to drive valuation opportunities to our agent members, which of course is what they're looking for more than anything else at the moment. So there's quite a few announcements to come between now and late February. We've also got a couple of new products that we're in beta test at the moment. Those products will be launched again in that period. So it's going to be a busy few weeks, that's for sure.
I'm looking forward to seeing the TV ads. That'll be great over Christmas.
Yeah, 26th of December will be the first one.
Okay, yeah, that's good timing, absolutely. When people book the holiday or look for houses. So
that's it.
Anyway, thanks very much for your time, Jason. Absolutely fascinating, and best of luck going forward. And look forward to hearing how the business has traded in late Feb, early March.
Pleasure to speak to you, Paul, as always. Thanks for your time.
Thanks.